It's our privilege to have Chairman Rostin Behnam from the Commodity Futures Trading Commission with us today. Chairman Behnam was with us last year in Anaheim, and he was planning to be here in person this year, but press of business in Washington dictated otherwise. Really pleased to have some of his time today. For those of you not familiar with Chairman Behnam, he was appointed chairman back in early 2022. He's been with the CFTC since 2017. You know, among his many leadership accomplishments, he led the creation of the Climate-Related Market Risk Subcommittee, recognizing that weather and climate events present risks to economic productivity, financial stability, and household wealth. On top of that, he's established the first ever climate risk unit that will support the agency's mission by focusing on the role of derivatives in understanding pricing and addressing climate-related risks and transitioning to a low-carbon economy. Chairman Behnam, thank you very much for making time for us today. Welcome.
Thanks, Craig. Hopefully you can hear me and see me.
We can hear you just fine. Thank you. Chairman Behnam.
Thanks for that introduction. It's great to be with you again. Sorry to not be able to be in person this year, but glad we're able to do this virtually.
Well, you're missing a great time in San Francisco, but maybe next time. I'd like to start us off by asking you about the proposed guidance that the CFTC has recently been pursuing, looking at guidance on how voluntary carbon credits that are listed on designated contract markets, often known as derivative exchanges, that you issued that in December 2023. What led the agency to issue that proposed guidance, and how has it been received within the U.S. government and elsewhere?
Thanks, Craig, for that question. A few things that I just maybe level set for the audience. I know some are familiar with us at the CFTC, others may not, and what we do and the markets we regulate. And you alluded to this in your opening remarks. I started at the commission in 2017 in the Trump administration, and then was elevated to chair in 2021 when President Biden won the election in 2020. But going back to my time as a commissioner before getting elevated to chair, I had done some work, which you mentioned, this climate committee that I convened about 30 or so stakeholders, public interest, academics, NGOs, financial institutions, and we were able to put together a very comprehensive report on the relationship between climate change and financial market risk. And really, at that moment, very different administration, very different approach to climate and what role the government can play specifically, within the financial services and financial regulatory perspective. So it was a very comprehensive report. It covered a lot of different areas around what financial regulatory bodies and regulators could do to address some of the risks associated with climate change. As many of your attendees probably know, disclosures has been a big issue over at our sister agency, the Securities and Exchange Commission. Different other banking regulators have been thinking about what they could do with respect to climate change to mitigate some of the risks and protect our financial system, which ultimately has an impact on our economy and our country, of course. Having that sort of in our back pocket, turning to when I became chair, started to refocus and see what we could do to really zero in on what the agency does, what our remit is, what our mission is, and what we could do from a regulatory perspective to have a positive outcome on some of these issues that we're observing in our market. And ultimately, this led me to the voluntary carbon market. We've seen an emergence and growth in voluntary carbon credit contracts that are listed on CFTC exchanges. And this is where I'll level set for just 30 seconds. Derivatives contracts are financial contracts whose value is derived from an underlying commodity. So many of you may be familiar with more typical futures contracts around corn or soybeans, natural gas, oil, gold, silver, physical commodities. There are also financial commodities around interest rates and credit risk and foreign currency. But ultimately, what we've seen is an emergence of voluntary carbon credit futures contracts. And when we have a futures contract listed on our exchange, we then have an interest as an agency in the health of the underlying market. And that's really what all of you do and have been working towards for many, many years, is a healthy underlying carbon market. And in this case, we focused on the voluntary carbon credit market. And we should talk about this later on in the discussion, we're a civil enforcement agency, and then we're a regulatory body as well. So we set rules of the road for our stakeholders and our registrants, and we have civil enforcement authority to bring an enforcement action if someone is violating our law. And we do bring a number of enforcement cases every year. So the vision really started many years ago, and it really led us to where we are now, which you mentioned, the December proposal guidance. It's non-binding, but it really sets some clear parameters for what we expect our exchanges, our regulated exchanges, to do as it relates to voluntary carbon credit futures contracts that are listed on our markets.
Thank you. When do you see the CFTC finalizing the guidance that was issued in December?
Yeah, so we proposed it, as you mentioned, in December. We had about a 75-day comment period. I'm sure some of the audience in their organizations, we had about, I think, close to 90 comments, which is quite a healthy number for a guidance or a rule proposal. That ended on February 16th, and our goal at this point is to take the comments in, read them, analyze them, potentially make some changes to the guidance itself, and then ultimately put it before the commission. I'm one of 5 as chair, hopefully for a vote to finalize it later this summer. And you asked this in your earlier question, but I think it's worth noting, when we did put it out in December, we had a lot of very positive feedback from the public, but also from the administration. Secretary Yellen at the Treasury Department has been very supportive, and credit to the Treasury Department. Also, I had the privilege to be a COP in December as well, early December, and present some of the work. So we also, Secretary Kerry, who was then U.S. Special Presidential Envoy for Climate, recognized the work. I mean, there's a lot of, I think, exciting things going on in the VCC space. So this is one component, I think, of a larger effort by the administration and other global bodies to scale and improve this market.
Well, thank you. The Whistleblower Office in the CFTC's Division of Enforcement issued a carbon alert in June 2023 to notify the public on how to identify and report potential violations of the Commodity Exchange Act connected to fraud and manipulation in the carbon markets. The Division of Enforcement also announced the creation of the Environmental Fraud Task Force in June 2023. Can you tell us a bit about those 2 announcements and what responses have these received?
Yeah, Craig, it's a really important question, and one that I want to take a little bit of time on so everyone in the audience can understand what we do, what authority we have, and what impact positive we can and hope to have on the carbon credit market. As I mentioned, we're a civil enforcement agency. We regulate derivatives contracts, which again are financial contracts that their price is derived from an underlying commodity. But Congress did give the CFTC enforcement authority in underlying cash markets, is what we call them, if there's fraud or manipulation. So I'm going to use an example from a traditional commodity, and let's just say soybean. We have soybean futures contracts listed on CFTC registered exchanges. These contracts trade daily, and there's different rotations that expire, and new contracts come and trade, into the future. If there is manipulation or fraud in an underlying physical soybean market, where there's actual soybeans, physical soybeans being traded, sold, bought, you can imagine that manipulated price or that manipulated or fraudulent transaction could have an impact on the price of the markets that I regulate. So Congress did give us authority to oversee and bring enforcement actions in an underlying physical market if there's fraud or manipulation. So we have a whistleblower office at the CFTC. I am sure many can suspect or guess what a whistleblower office does. We have this incredible authority that was granted by Congress to reward individuals who bring tips or complaints or issues to the CFTC about a violation of our law. And it's been quite successful over the past 10 years, really was driven out of the financial crisis in 2008. and a law that was passed in 2010. And we have rewarded individuals with hundreds of millions of dollars because they were able to bring information to us about fraud, manipulation, and violations of our law. In this particular case, I put a task force together. We really got a group of experts in the agency to think about carbon markets as we've seen the development and the growth and the issuance of carbon credit futures contracts. And we issued this whistleblower alert to really let the public know about our whistleblower office, about our whistleblower authority, and ultimately to receive as much information from the public as we see this issue around credibility and integrity in the carbon credit market come to us. Let us know if there's manipulation, if there's wash trading, if there's any fraud in the underlying carbon credit market. That could be ghost credits, that could be double counting, that could be fraudulent statements related to the material terms of a carbon credit: quality, quantity, additionality, permanence, the project type, methodology for emissions claims, environmental benefits, permanence, a buffer pool, any number of things. We've also gotten a lot of information about tokenized carbon credits. I know this is something folks are thinking about in the voluntary carbon credit space, tokenization of these credits given the global nature of the market. So any number of things we want to be aware of if there's fraud or manipulation, and let the public know that we, as a civil enforcement agency over commodity markets, we can be helpful in policing these markets. We can be helpful in elevating integrity, in bringing transparency, which I think ultimately everyone will benefit from, because a healthy, transparent market means we can scale it. I heard earlier, I think, Craig, your opening remarks talking about the importance of this being a single tool in a larger toolbox. We all are going to play roles in this challenge around climate change. Carbon markets are going to be a critical role in terms of financing transition, scaling this market so that folks can feel comfortable and confident whether they want to buy credits to make a commitment to net zero, or if we want to see capital flowing to different areas of the world so that we can see transition away from traditional fossil fuels and into renewable energy sources.
Thank you. Very interesting. You also are the co-chair of the International Organization of Securities Commission, their Sustainable Finance Task Force Carbon Markets Workstream. IOSCO issued a voluntary carbon markets consultation report in December 2023 at COP28. Can you tell us about that work stream? What's the interplay between the work the CFTC is doing on the VCMs and the work that IOSCO is leading?
Yeah, so another important effort and initiative, and I'm really privileged to be a part of that as well. IOSCO is essentially an international multilateral organization of market regulators. We try to come together globally and to produce policy and rules that are as uniform as possible, that are as uniform as our national laws and policy will allow. But ultimately, markets, financial markets are global, so we want to come up as best as possible with a level playing field. That goes for traditional financial markets, but as we're starting to see the emergence of voluntary carbon credit markets, we also want to create a level playing field and a set of rules which is uniform across the globe. Never easy, but I think it's something we should aspire to, and I think we should try to come up with a positive outcome. So what we've done is had a series of consultations going back to 2022. We put out questions. We wanted to submit and solicit feedback from stakeholders to see what we could do as market regulators to build a market structure around voluntary carbon credit. Every jurisdiction, country is going to have different authorities. Speaking from a U.S. perspective, there's no direct regulator over voluntary carbon credits. Some other countries may have that authority or may be easily able to get that authority from their Congress or their parliament. Different story in the U.S., so we're using the tools that we have. But ultimately, we came up with 22 good practices, and I would say two things. One, from a just very basic level, the good practices are how do we establish a market that's fair, that's credible, that's transparent, so that, as I said earlier, we can help scale the voluntary carbon market, understanding the importance of it to the transition that we're all trying to achieve. The other point I'll make is, a lot of the stuff that comes out of IOSCO is not necessarily binding, but the fact that we are taking it up at that global level is a huge, huge step forward for the carbon credit market. It really is a sign and a signal to all of you, who I know many of you have been working in this area for years, if not decades, that there is a transition happening within a larger pool of policymakers, regulators, elected officials who see the benefit and the importance of carbon credit market, voluntary and compliance as well. But in this particular space, in the voluntary market, we're seeing this movement towards wanting to have rules of the road, wanting to see regulation, wanting to see proper governance, so that we can see the growth that needs to happen over the next few years and ultimately decades. So the details are important. I would encourage many of you, this is all available on the internet, both the CFTC's work and IOSCO's work. But the message I certainly would share with all of you today is, even a year ago, we've made such great strides in seeing this market develop, working with private sector initiatives. I know you mentioned ICVCM and some others who are trying to come up with standards at the sort of private sector level. But this government, official sector, public sector effort, I think, is real, it's tangible, and it's building momentum. It's not where we need to be right now, but I think we're heading in the right direction. We're on the right course and path, and hopefully with continued encouragement from all of you and work from you, we're going to really make positive headway over the next couple of years.
Great. In light of both these domestic and international efforts, how do you see the voluntary carbon market evolving in the next couple of years? And just as importantly, as you look out 10, 20 years, where do you see the market heading?
Yeah, I think, Craig, it's a good question. We've seen some bumps in the road, I think, over the past couple of years. Pointing to your first question, the work that I've done going back to 2018 and looking at the holistic landscape of financial regulation and financial markets and climate change. And then when I became chair and thinking about what I could do in this particular role and really moving in the VCC space. It's slow, but I spent some time with many of you and talked to you about all the work that you all have been doing for years. And I think it is a very positive sign and signal that there is interest and there's demand, and that there's finally movement towards really establishing credible markets in the space. I mentioned being at COP, having the privilege to be there, and hearing Secretary Kerry talk about the importance of voluntary carbon markets. And this message was shared from the World Bank. This was shared from other large finance ministers from across the globe. I mean, there is real momentum. We are probably going to hit a number of bumps along the way. I think in the short term, there's still a credibility issue. I think the narrative, if I do media and I talk about this work outside of those folks who really focus on carbon markets, their immediate reaction really tends to just go to integrity and credibility and that's a very opaque market. Why would you go there? But I think the opposite way, and call me naive, but I think let's step in, let's shed light, let's bring transparency. That's the best solution to any market that is subjected to opacity or integrity issues. Let's elevate that integrity. Let's use the tools we have as both government and private sector to help shape market governance and transparency, as I said earlier, so that we can see the growth happen the way it needs to. And the toolbox analogy is perfect. So this is one tool. It's an important tool. I think the short term, we're heading on the right path. It's going to be bumpy, but we have to be persistent. We have to stay the course. And I do think with that persistence and that vision for the future, the next 5, 10, 20, 30 years is bright. I think we're going to see a lot of capital allocation and investment in this area. There's a lot of interest from sovereign wealth funds, from nations, from corporate individuals wanting to be a part of this and contribute to transition and the net zero effort. And I think the carbon markets is really a great place. But we have a lot of work to do. A lot of these projects need to see some sort of structure that I think will benefit them, but ultimately will benefit the demand side of these credits, so that there's that credibility and that trust that these credits are worth what they say they are. So we're hoping to play an important role in that. We are the one, I think, agency that has a really critical authority using, as I mentioned, the Civil Enforcement Authority coupled with our commodity market expertise. and joining the guidance with the civil enforcement authority, hopefully will be a very powerful tool to helping support the growth and the integrity of these markets.
Well, thank you. Those of us who work in the carbon markets understand that in order to scale, we're frankly going to have to grow up to recognize that carbon is just another significant commodity on the planet. We thank you for your leadership in helping establish those guardrails, and thank you for taking the time today. Please join me in thanking Chairman Behnam for his involvement. Thank you, sir.
Thank you. Great to be with all of you. Enjoy the day.